Hey everyone, Coach Investor back to another video for today. So as promised, let's go over what Wall Street thinks of Nvidia after that blowout guidance. I'm going to go over a lot of analyst notes and new price target. Sorry if that's a bit boring for you, but it is interesting to see how analysts are thinking, especially after the price has gone up substantially. Now remember, we've seen this in the past. In the past, prices for companies like Roku, for example, right? They have had price targets for around $350, $400 or so. Then suddenly, when the price of the stock crashed substantially, suddenly new price targets were lowering our price target to 80, to 70, to 60, something like that. So some of the time, if not most of the time, analysts do follow the price of the stock and then suddenly they update their price target, which is usually 6 to 12 months out. Now, when we look at Nvidia, the stock, this is on the weekly chart, we can see that this week will probably be a red candle, which might indicate a top currently at around $400 or so. The RSI still on a weekly, very much overbought. MACD still very bullish. Again, this is on the weekly chart. If you go and look at the daily, then of course we had that huge jump after the earnings report. RSI still overbought. And yes, if we were to fill this gap, this would mean that the stock would be down quite a lot. Now, as I said previously, with a company like Nvidia, don't try to break the momentum by shorting it or something like that. No, wait until there is some confirmation with the market. Yes, you might miss out on 5% gains or something like that, but at least you'll have that confirmation by the market that suddenly there is going to be a downturn. Now, I would love to know what you have been doing with your Nvidia shares. Have you been selling, holding? What's your game plan? Let me know down in the comments below. Now let's go and have a look at some analyst notes. So the first one I want to touch on is a price target raise from $300 to $500 at TD Cowen. They also keep an outperform rating on the shares. The analyst said results hugely surpassed almost any expectations, driven by both data center, Hopper and Ampere strength, and gaming. Generative AI no longer a trend but a paradigm shift, now translating into material early revenue for the leader in AI compute. Then we've got another price target raised from $300 to $472 at Jefferies, keeps a buy rating on the shares. The firm estimates that Nvidia data center revenue will surpass Intel and AMD combined CPU sales for the first time ever in Q2, officially making what it calls the fourth tectonic shift to a parallel processing era, as it had originally argued for in 2017. The firm expects Nvidia to continue to take share in the data center until it hits 80%, consistent with other computing eras, and notes that it raised its estimates of 2026 earnings per share power to $17, up from $15. Up next, a Wedbush analyst goes from neutral to outperform with a price target of 490, up from 290. The firm notes that while heading into earnings, it was understood that AI demand was strong and would likely drive some upside. However, Wedbush believes the sheer magnitude of AI-related growth implied by Nvidia's outlook surprised everyone. To get to Nvidia's $11 billion top-line guide, the firm sees implied data center growth as having to be north of 100% year over year. While Wedbush believes demand levels need to be monitored, the firm also thinks it is correct to view Q2 and 2024 revenue levels as a new norm on which one should base forward revenue estimates. Up next, an analyst at Evercore ISI raised from $320 to $500 and keeps an outperform rating after Nvidia guided to July revenues of $11 billion, which was 53% better than consensus, or $3.8 billion better in dollar terms. The analyst tells investors, "We've simply never seen a beat like this ever. Data center sales are expected to essentially double from $4 billion in April to $8 billion in July. And the obvious drivers here are accelerated computing and generative AI. But the magnitude of the beat amid supply constraint is just amazing. With a clear path to sustained growth into 2025 and beyond, with it still being the top half of the first inning in generative AI accelerated computing, Evercore sees a long path of growth ahead." Now, of course, with all those positive notes, you have to think that a lot of this is already baked in. It's not to say that there is not more room to grow, but I do believe that a lot of it is already baked in the price. What do you think? Now, if you're enjoying this type of videos so far, leave it a thumbs up, subscribe if you have not, would really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Up next, we have a note at Bank of America. Price target raise from 340 to 450, keeps a buy ratings on the shares. Q1 sales were 10% ahead of consensus, but the headline for the company's quarterly report comes from the remarkable Q2 sales outlook of $11 billion, which Bank of America notes was nearly $4 billion ahead of consensus and implied $2.04 in pro forma EPS, double expectations, which we've touched on in the last video. Driven by the start of major data center investment in generative AI and large language models, this is the largest raise we have seen in our coverage. Then we have another price target raise from $300 to $370 and keeps a hold rating on the shares at Stifle. You can tell me in the comments, 1 or 2. Recent momentum continues as fiscal Q1 results beat consensus expectations and the company's Q2 revenue outlook was significantly above expectations. Though as the company's data centers grow, questions on the near-term supply environment are likely to continue. The firm raised estimates and continues to view Nvidia as the best positioned near-term beneficiary of CSP capex spending trends. Then we go to Needham. Price target raised from $300 to $460, keeps a buy rating on the shares. Customers are racing to meet large language models and generative AI-based demand across all major modalities. And with data center revenues increasing over 80% in the quarter sequentially, the firm models sequential increases through fiscal year 2024 as Nvidia secures substantial capacity. Needham adds that nearly all past headwinds for Nvidia are now in the past, so also with regards to gaming, with the firm shipping to true AI-related demand. Up next, we go to BMO Capital. Price target raise from $350 to $450, keeps an outperform rating on the shares. The company's Q1 results and outlook are redefining beat and raise. BMO adds that it's now modeling 2023 data center revenues of $30 billion, which is more than half of what it forecasted for generative AI to lead to by 2027. The firm contends that Nvidia is uniquely positioned to benefit from an ongoing shift in the compute landscape as the enabler of AI, with its deep and wide moat ranging from hardware to software that it has been building over the years. Remember, we've talked about how software will become a very, very big deal for Nvidia, which is why you will see margins go up, since software, high margin business, much higher than hardware. And we're seeing this happening already right now. Up next, we go to UBS. Price target raised from $315 to $475, keeps a buy rating on the shares. Nvidia posted strong guidance despite some fears that supply could gate revenue over the next few quarters. And after the stock moved 25% aftermarket, it can still go higher. Nvidia is arguably one of the major winners in this phase of AI adoption, as it crowds out more traditional enterprise hardware servers and software and takes more of the cumulative profit pool. We're nearing the end here. We're now at Piper Sandler. Price target raise from $300 to $440, keeps an overweight rating on the shares. The company gave higher than expected guidance driven by AI and data center growth, as the company saw an unprecedented influx of orders associated with generative AI. The three major users of generative AI, cloud players, consumer internet companies, and enterprises are all gearing up to meet oncoming demands, and Nvidia is impressively seeing demand in both of its key architectures. The analyst adds that it views the company as extremely well positioned for the near to mid-term in the data center segment and calls it one of the best ways to invest in generative AI. Deutsche Bank has increased their price target from $220 to $390 and keeps a hold rating on the shares. Then we go to Craig-Hallum. Price target rates from $190 to $400 and puts it at a buy. The firm notes that Nvidia's Q2 guide is without precedent in terms of its upside to consensus estimates on a business that is already so large. He thinks the key question is to what degree is this data center segment going to have sustainable demand versus experiencing some sort of inventory burn in 2025. The firm lands on the side of continuing investments, and this leads it to its 2025 earnings per share estimates of $10, with the implied software requirement of the accelerated computing stack that drives stickiness and high margins. The analyst believes investors will be willing to pay consistently high valuation for this opportunity. And then last one here from Morgan Stanley, price target raised from $304 to $440, keeps an overweight rating on the shares. The company guided to a blowout in the July quarter with revenue that we were forecasting they would hit in early 2025. The transitional surge in AI spending is paying off much earlier than expected. We simply have no historical precedent for the magnitude of this step function, particularly in absolute dollar terms, given $4 billion of data center upside in July quarter. The firm said Nvidia's track record early in an upward revision cycle is typically very conservative, stating that guidance for upside like this has at least historically been followed by more upside. Well, that last part is very interesting, because imagine if next quarter they do even better than what they guided for, and then the quarter after that, for Q3, they raised guidance yet again. I think the stock will explode another time. Of course, on the other side, if they do miss, then look down below. Now, with Nvidia gaining a lot of traction with regards to data center, with regards to demand for more GPUs, of course, we've talked about the fact that Jensen has talked with Pat, CEO of Intel, and maybe we might see a partnership there in the future. Remains to be seen. We've talked about that in the last videos with regards to Intel, which will be in the top right corner. But with regards to Nvidia right now, at a $1 trillion valuation again, how much more upside will you get from the stock currently? In the next 10 to 20 years, yes, probably the company will be growing and growing. But right now, since it's already at a $1 trillion valuation market cap, since valuation right now, traditional metrics, if you look at that, makes absolutely no sense, how much more upside will you have currently? So for people that are looking to buy into Nvidia right now, I would suggest wait for maybe some red days. For those that are holding Nvidia for the long term, well, if you don't need the money, then why touch your position and pay taxes on your gains? That's just my opinion. Of course, do share yours down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.